Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be talking about the little price action move that we've seen here over the last couple of hours on Bitcoin, because just a few hours ago, Bitcoin was trading up here close to $3,700, but now, as you can see on the right of your screen, Bitcoin is trading about $200 lower than that. What we saw a couple of days ago is Bitcoin broke bullish out of the end of a consolidation pattern here, and in a video I released 2 days ago, I talked about how you had to be careful of breakouts like this because I was concerned that we may in fact see this kind of Bart Simpson pattern move to the downside after a bullish breakout. We might actually see Bitcoin break bullish and then break bearish in an even more dramatic way, and that's exactly what we've seen happen. In today's video, I'm going to be talking about the breakout here on this consolidation pattern, and I'm also going to be talking about why we were worried that this kind of pullback was going to happen on Bitcoin, and we're also going to be talking about levels of support and resistance, because there's a couple of different levels of resistance I want to show you that we hit, and there's also a couple of different newly established levels of support that I want to bring to your attention, because they are most certainly going to be important for our trading coming on into the next couple of days, and on into the next couple of weeks more than likely as well. So if you guys enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell, guys. We do crypto videos every single day here on the Crypto Jeb channel, and I wouldn't want you to miss any of them. So without much further ado, let's go ahead and get right into it. Bitcoin, as we said earlier, is currently trading around $3,525. Here on the Coinbase chart, Bitcoin did come down and bounce pretty cleanly off of $3,500, and that's one of the levels of support that we're going to be discussing in today's video. As we can see, if we draw a horizontal level right here, this is not the first time Bitcoin has come down to this level, and in fact, we've set a double bottom down here recently. Like I said, we're going to be talking about that a little bit more later on in the video, because that is definitely going to be substantial and significant moving on into the next couple of weeks. Of course, whenever you establish a new critical level of support, it is. But before we get into that, I do want to go ahead and do the crypto market recap, because there are some specific things we want to talk about here on CoinMarketCap. Bitcoin across all exchanges is currently trading around $3,600, and Bitcoin is down 4% on the day. This is a rather major move coming out of Bitcoin here over the last 12 hours or so, partially because we haven't seen a move this significant in a little while. It was a couple days ago, a couple weeks ago, in fact, that we saw a move this drastic or larger, this one right over here, and it was also a bearish move. The fact that 2 of the largest moves we've seen out of Bitcoin in the last couple of weeks are bearish is definitely a sign that we want to be looking for. Anyway, if we look here on CoinMarketCap, we're going to see that the vast majority of the crypto markets are following Bitcoin. We see Apollo currency still trying to take off and go to the moon, pun absolutely fully intended. And we see that PayPal is doing whatever PayPal is doing, but the rest of the cryptocurrency market is very, very red right now. We're seeing a rather deep red, most of the cryptocurrencies here on CoinMarketCap being down between 5 and 10%. We only have two double-digit losers in Loopring and OneChain at the time of recording this video. That may have changed by the time this video goes live, but at the moment, they are the 2 biggest losers. Not a whole lot we want to talk about here, but I did want to bring to your attention that the entire crypto market is suffering today. It's not just Bitcoin, and Bitcoin does have some rather high volume, sitting around $5.3 billion. That's not a lot higher than what we've seen over the last couple of weeks, but we have seen a lot of volume come in on these 2 hourly candlesticks when Bitcoin did actually crash here from where it was trading just a few hours ago. Anyway, let's go ahead and talk about this consolidation pattern, and I want to reiterate why I was worried about something like this happening. If you guys go back to 2 videos ago, if I remember, I'll link that video in the top right. If I don't, it's the video before the last video. I had drawn my consolidation pattern something like this. I drawn my consolidation pattern like that, and Bitcoin had, in that video, I talked about how it looked like it had broken out and was trending to the downside, and I was worried about Bitcoin falling down and hitting this level of support and breaking it in exactly the same way that we just saw, except Bitcoin broke out of this consolidation pattern, broke bullish, started trending downward. This was a very bad sign that we saw Bitcoin trending downward after we saw a bullish breakout, and then we saw it fall back below initial support. That's the exact scenario that I laid out, and I told you guys to be prepared for something like that. I told you guys to set stop losses below levels of support that, if they are broken, will initiate larger bearish moves. And this is why I tell you guys this, because if you guys were prepared for this and had stop losses below 2 critical levels on Bitcoin here, you had a stop loss below this downtrend of resistance right here, at the time a downtrend of support, a stop loss there, and then also a stop loss down there, or a stop loss at either one of them, you would have stopped yourself from losing 1 or 2% here, which was about half of this bearish move. It's very important that you guys use stop losses, and that's why I talked about it in that video. Now, another way that you could have predicted this kind of move coming was after we saw Bitcoin start trending downward here, we saw that Bitcoin had a breakout right there. Bitcoin had a breakout, and its flag started trending to the downside. That was a very bad and bearish thing to see. We did not want to see that, and that did signal that we were going to see some kind of move here. And if we were to come into the minute chart, what we're going to see is that the movement happened very, very quickly. This is not something that you would have likely been able to catch at the time. You would have wanted to catch this with a stop loss. This happened early in the morning. A lot of you guys may have been asleep, and this is probably something that you wouldn't have noticed. We're on the minute chart. This entire move happened in the span of 5 minutes. And if we look at the volume here, we can tell that it was a very obvious bearish breakout because we saw a lot of volume coming here on the minute candlesticks. It would have been very hard to predict this, but if you had have set up your stop losses earlier on in the manner that you should have, then you would have been protected from this. That's why I give you guys these pieces of these ideas about what you need to do with your trading and tell you guys you need to use stop losses. So let me explain why we saw something like this happening, because we saw a very similar thing happen recently. Just a little while ago, at the end of 2018, mostly in the beginning of 2019, we saw Bitcoin in a triangle consolidation pattern, something like this. And what we saw is Bitcoin broke bullish out of it. But what we ended up seeing was Bitcoin traded sideways and then actually broke bearish, got support right around the region that it initially broke out from, trended downward, and then broke bearish again. This is the second time we've seen something like this happen in the last couple of weeks, and I'm not going to get into that today, but the fact that we've seen this happen twice, a bullish breakout followed by a larger bearish movement, is a very, very strong indicator of bearish strength and strength in the bull, so keep an eye out for that. But you do want to watch out for these things, because just because you break bullish out of a consolidation pattern does not necessarily mean you're out of the woods yet. It just means that you've broken bullish out of it. It's very possible for something like this to happen. The first place that I remember noticing this and realizing that this is a very real possibility for consolidation patterns, or actually this isn't the first time I realized it, but a very good example of this shows up on the Ethereum chart. I've shown this example a couple of times on the channel, and I'm about to show you guys again, because this is a pattern that does play out semi-frequently on the Bitcoin chart and on many other charts. So let's go ahead and show you this on the Ethereum chart whenever the Ethereum decides to load. The fact that Bitcoin breaks bullish, like I said, does not just necessarily mean that we've already been out of the woods, as we can see here on this Ethereum chart. Ethereum back over here on the ETH/USD chart broke bullish, traded sideways and downward. The fact that it traded to the downside is a very important thing to note. After it traded downward, we saw a bearish breakout below support, and in this case, the support level was this downtrend of resistance that Ethereum was trading above and initially below, and then once again back below. So watch out for that kind of thing happening. Anyway, I think I've made my point here with these consolidation patterns and the fact that just because they broke in bullish does not mean you're out of the woods yet. Always make sure you're protecting yourself with stop losses. Very, very, very important. But now that we've talked about that, let's go ahead and talk about what this means for the cryptocurrency market. Well, there's a lot of different things that this means. One of the things that is important, one thing that we want to be looking out for, is the fact that $3,575 has been breached for a third time. We've seen this happen too many times for this to be a major level of support anymore, or at least a very strong level of support. We saw over here that Bitcoin broke $3,575 in this little area right in here, and then recently we've broken it twice, once there and once here. That means, in my opinion anyway, that $3,575 is nowhere near as strong as it was just a couple of weeks ago when we were sitting above it and had only broken below it once. It's still an important level of support, but it's nowhere near as strong as it was. Now, that being said, we have set another level of support in motion that as of yet has not been breached ever since its creation. Sorry about my phone going off there. What we see here is that Bitcoin came down here twice and set a level of support right there and right there. That means that this level of support is what is known as a double bottom, and a double bottom is a very strong level of support, and what we see is that that just so happens to line up at exactly $3,575. So what we're seeing right now is there's a level of support at $3,575. Man, I'm getting all kinds of distractions. Now my dog is coming in. Anyway, we see that there's a level of support down here at $3,575 as set by these two bottoms. So watch out for that being a level of support. I'm worried about the bears being very strong at the moment because we've seen these two bullish breakouts followed by bearish downtrends and crashes. So I am my strength for a little while, my confidence for a little while was in the bulls. At the moment, it's definitely moving back towards the bears. Be very careful of what the market is doing right now. I've talked about in countless videos why I'm concerned about this and why I think the bears are stronger. We see that we're in a bearish trading channel. We have this downtrend of resistance and a downtrend of support. Not a good sign. We see that Bitcoin is breaking levels of support. We did just set a level of support at $3,500, but I'm not totally convinced about that holding. I'd like to see what happens in the next week or so to see if we break below that. But if Bitcoin does break below $3,575, excuse me, $3,500, we've already broken below the former. If we do break below that, I would expect Bitcoin to be moving towards $3,300 or even as far low as $3,100. My sentiment after this bearish rally after this downtrend that we've seen in the last 12 hours is definitely back in the favor of the bears. My confidence is definitely in the favor of the bears at the moment. Anyway, guys, that's basically what I wanted to talk about here. I did want to show you guys a couple of different levels of resistance that we hit that you may be able to use in the future to give you an idea of where we're going. If we look here on the 20 exponential moving average, it looks that we've gotten very, very clean resistance here at the 20 exponential moving average here on the daily chart. Very important moving average. I've talked about many times why this is such an important moving average. It tends to show up as a level of support and resistance very, very commonly, and it also tends to do this thing that it did right here, which is trade right in the middle of a consolidation pattern, as it did right over here, trend right through the center of it. So it's a very important moving average. We did get resistance off of it, and that coincided with our bearish rally here over the last couple of hours. And if we look on the hourly chart, I also want to bring up something that someone told me that I should have mentioned in yesterday's video, and that is the fact that we were looking at Fibonacci resistance as well. If we were to bring our Fibonacci retracement down here, we would see that Bitcoin retraced at its wicks all the way up to 50% here on the Fibonacci retracement tool, and on a lot of the candles we got resistance in the range of the 38.2% Fibonacci level. So there are some pretty obvious levels of resistance that we were looking at for yesterday's video. Anyway, guys, a lot of those things are of course hindsight. Those two levels of resistance aren't terribly important anymore because we've already rejected off of them, but I showed them to you so that you can use them in your future technical analysis and look for them in future breakouts and future downtrends so that you can look to them for levels of support and resistance. They are important tools, Fibonacci and the 20 exponential moving average. Anyway, guys, that is basically going to do it for today's video. Tell me in the comments section down below if you think $3,500 is going to hold for the rest of January or if you think it's going to break over the next couple of days. I'm interested, as always, to hear your opinions in the comments section down below. And, guys, tomorrow is Monday. It is Martin Luther King Jr. Day, and I'm actually going to be running a sale for the Cryptocurrency Technical Analysis Academy from my man MLK. If you guys are interested in getting in the course, hold off another 24 hours. There will be a 20% sale going on CT2A. I will update you and give you guys more information on that in tomorrow's video. But for today, I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.